Government shutdowns happen a lot more often than you actually think. And to be honest, most of the times, there's not all that much of an impact from these shutdowns. But in this instance, this government shutdown of 2025 may have profound effects for the economy, specifically due to the fact that healthcare premiums due to Obamacare subsidies may be ending. And if they do end without extension, this will cause catastrophic effects for the overall economy. And I'm here to break all of it down for you. Hey everybody, I'm Spencer Hakimian and welcome back to another episode of What's Moving Your Money with Forbes. On today's episode, we're going to be covering the extreme financial risk that may arise in 2026 if the government does not get its act together. Ultimately, what I believe will end up happening and why I believe markets are looking through all of this, although the circumstances could be drastic if government fails to act. I hope you guys enjoy. So guys, let's just be honest, most government shutdowns are really just posturing. They don't mean all that much in the grand scheme of things. Sure, they might last a couple of weeks, maybe even up to a month in some rare instances, but ultimately they do not have such an important impact on the economy. And this is due to the fact that all the spending that the government was supposed to do just gets resumed and catches back up as soon as the government shutdown ends. So if we were in a 1 month government shutdown, let's say all of October 2025 is spent in a shutdown until November of 2025. Well, what ends up happening is that yes, October 2025, the economy will be a little soft because of the fact that the government was not spending. And keep in mind, the government is 40% of American GDP. But you end up getting a double effect in November. You get twice as much spending as you would have got last November due to the catch-up effect. And ultimately, it doesn't really matter all that much in the grand scheme of things because it balances out. But this government shutdown is a little unique in that they are arguing over a potential long-term consequence that the American consumer and American households will face unless extended, and that is the Obamacare subsidies. Whether you like it or you don't, whether you believe it's fair or not, I'm here to talk about the reality on the ground. There are subsidies in place via Obamacare to help consumers pay for their health insurance premiums. If those subsidies do not get renewed by the American government, this will end up having to come out of the consumer and the American household's wallet. And what will end up happening is healthcare premiums will double and even triple in some instances. That's not hyperbole. Go look on my Twitter, go look on my Instagram, go look on my TikTok. I've highlighted this 100 times, 100 sources. It's the talk of the town. And what ends up happening here is that if people have to begin paying more for healthcare out of their own pocket, what are they gonna do? Well, first of all, a lot of people will tragically lose their health insurance. And that's obviously awful for the economy. And second of all, the people that even do end up swallowing the bullet and paying for their own health care, well, they're gonna have to take that spending out of somewhere that's a lot more productive into the economy. Maybe they took their wife and kids out to dinner once a week. That's gone. Maybe they were planning to do a kitchen remodeling. That's gone. Maybe they were planning on, investing into their own business. That's gone. All of that money that could have been spent on more productive things will now be spent on healthcare. And look, you look at this and you can see why people are angry about the government shutdown because their healthcare is in a way at stake over here. Obviously that was drastic, but let's talk about why perhaps the stock market and other asset markets are looking through it. It's actually really simple because the stock market is assuming that this is all just posturing. The Republicans are acting tough. The Democrats are acting tough. Everyone that knows me knows I'm not a Republican. I'm not a Democrat. I'm just an American. I'm just here to observe what is going on. But the stock market is simply saying they do not believe that when push comes to shove, neither the Republican nor the Democrat Party will let this get so bad so that healthcare premiums double or triple in the United States. Ultimately, there will be some kind of settlement. And Democrats will have to sacrifice on a little, Republicans will have to sacrifice on a little, but this will get get passed, because if it doesn't, the consequences are drastic. And heading into an election year in 2026, everyone knows their job is up for line, especially those people that are in those swing states, swing cities, swing counties all across the United States that end up really making up the control of the House. So this is just something that I think is worth paying attention to, but ultimately in the long run, I do not believe it will be so severe that there will be a big economic issue that arises from it. So guys, that is all my time for today. I want to thank you guys, and I hope to see you guys soon.